There we go. Good morning, ladies and gentlemen, everybody. Welcome back to another pre-market stream today. As you can see by the title of the stream, things aren't looking good. Things are actually kind of looking a little worse out there. Probably going to be a good chance that YouTube censors this video a little bit based on the title. Yeah. So anyways, we're going to get started here. So before we get started, as I said in the title of this video, the NBA has suspended the rest of their season. A player on the Utah Jazz has contracted the virus. Tom Hanks contracted the virus. So those are just kind of like a couple famous people. So it is infecting, some people here in the United States. In a neighboring city near me, they are starting to close schools down. And my fiance just yesterday got an email from her work, which she works in a psychiatric clinic. They're going to be closing down their office in 2 weeks and trying to get everybody to pretty much work remotely or from home. So now these, events are starting to actually hit home to a city near you, as we've been mentioning a couple weeks ago, as it probably would. So the stock market has opened up down about 5% today. We don't have much more to drop today before the stock market will get halted. So I think there's going to be an effort or a fight in the market to keep us from actually getting halted. So we'll see. We actually have regardless. So we have, we opened up, we're down about, let me double check. Let's see what we're down here. Oop, that's not it. Let's see. Yeah, so we're down about 5% today. So if we can drop another 2% on the day, we should go into a halt, I believe. So we'll see. Oh, it looks like yeah. So anyways, you guys get the point. So you can see there's only 58 people joining us on the stream so far, which is far less than we would normally get here. So we'll see if maybe the notifications didn't quite go out or what the case is. But with a title like that, you better believe YouTube would not want to express that video to the public. They would want to maybe push a video out that's more about dogs and cats and kittens, or how many sugary candies can I put in a blender with a 2 liter of Coke and drink as quickly as I can challenge. Those are probably more important things for people to see. Nothing, don't worry about this. So the other day, I'd even made kind of a Facebook post. Regardless, the other day there was a slight divergence in the market to go long on. I ended up going long on it. Made a little bit of money. It wasn't a great bounce. It ended up failing. It was like our most recent attempt at bouncing. Ended up failing. And so we're still kind of rolling lower. I really don't expect us to have a big green day here today. Let me double check, but we'll take a second and look at this. Yeah, there was. Well, so again, we're still early. I don't think we're gonna get a bounce just yet. We will get a bounce. It's just not happening just yet. Is pretty much all it comes down to right now. I will say this though. There's a 15-minute chart. Yeah, if you look at a 15-minute chart, you might be able to argue we have a divergence going into the open today. So we actually might start with the pop. That's possible. But ultimately, I would just still stay kind of on the bear side. I don't really want to short these levels. Again, I'll just be trading a bounce at this point. I'm not going to be getting short on these levels. But if I may, I think we're going to be seeing probably 4 quarters of negative growth, or just 4 bad quarters or not good quarters. All right. So yeah, I think ultimately we're going to see probably 1, 2, 3, or 4 bad quarters, and let me explain why. First, China was hit, and we had mentioned weeks ago that the quarter one is going to be bad because of the supply chain disruption that happened in China. Okay, so now that it goes from China and then it gets into Europe and now it's into the United States, how fast does it go through the United States? How fast does it go through Europe? How fast does it go through Russia? So what you're seeing now is more of a cascading, rolling effect, okay? Because first it's China, and China plays a big role in terms of supply chain and shipping, and you get the point. So with that happening, business is going to kind of get hurt here a little bit in the United States. So that should probably affect us in quarter one. Now that the virus is here in the United States, schools are closing down, people are being forced to work from home, some people may or may not get paid leave, et cetera, et cetera, et cetera. There's a good chance we're going to now see a negative quarter two because it just got to us and we're basically into quarter two as we're starting to see closes or schools closing down and things like that. So we should probably see a negative or a poor quarter two here in the United States. That would make sense. And then depending on how big of a role our exports and imports play with Europe and how closely our economies kind of tug and pull off of one another, depending on how quick or what the timeline is, and I don't know what the timeline is with, say spread and infection rate in the United States and or Europe, are they going to be hit equally right at the same time? Or, so you could have a harsher -2 if Europe is really affected equally as bad as we're affected here at the same time. But if the United States is affected harsher at a different time period than the EU, then you might have kind of a rolling effect from quarter two to quarter three. And then if the rest of the world has a problem, you might see quarter four. So it's hard for me to go out 4 quarters, but I could see 3 quarters of negative or slower growth. First quarter, and third quarter, it all seems very likely, okay? So that was to kind of try to get you guys up to speed and wrap your head around the severity of the chain reaction here. Again, as I'd mentioned in our private group already this morning, I'm not a doctor and I don't know those things. I'm into finance and economics and things like that. So from the view that I see it, some people will probably lose their jobs. Some people will not be working with paid leave. So if people don't work for a couple weeks, they may not be able to pay their car loan. They may not be able to pay their mortgage. It's possible you might see home foreclosures. And that's kind of the worst of it. But it's not far-fetched because of the precautions that are being taken by governments to ensure that this doesn't spread, right? Italy's on lockdown. I mean, so again, it's not so much that I worry about the virus, it's the impact through the economy that's going to trickle into everyday life. Again, the clinic that my fiance works at just said they're going to close down in 2 weeks and force her to work from home, via Skype or something with her patients. Some of her patients may not even know how to use computers, know how to use a camera, know how to stream, know how to use softwares, and may not even feel comfortable doing that. So in that sense, she will lose money. If she loses money, she's not going to go out or she won't spend as much money. She might cut back on expenses. That right there is a perfect scenario to help kind of you guys understand that's where we might head into a recessional period. If she makes less money, she spends less money. And that might happen for many other people as well, okay? And here's the other thing. Again, just about 20 minutes that way, schools are closing down. So this is something we mentioned like 2 or 3 weeks ago. If schools close down, if they get to that point, which we're now at, if schools close down, parents may be forced to stay home. And a study shows that I think in the United States, it was like 42% of healthcare workers, from nurses to nurse practitioner to PA to doctor, et cetera, all the way up the chain, like 42% of the healthcare practice and workers are females with children. So again, if 42% of the healthcare working force has kids that need to be attended to, and if it really cascaded, then you're pulling away from one of the most important people we can have up and working, right? So there's a lot of unknowns and a lot of uncertainties, but I think ultimately we should see a pretty slow year, okay? Now we're all caught up to speed, and I can stop scaring everybody. All right? So now the only thing that really the only levels I'm looking at for the S&P 500 right now, I think are 243. That's the only spot right now that I even see as a strong, reliable bounce point. So pretty much the drop of 2018. That's most likely where we would see a good attempt at bouncing. So I'm not really adamant about trying to play a long swing trade, bounce the market, anything like that until the markets get down to about 243, and that is right here. Oh, hold on. So this is 234. Right here is about 240. So pretty much until we're getting into that zone, I don't think I'll be too adamant about looking at a bounce trade. And I think that's ultimately where we're going. If you want to look long term, I mean, when you look at how long we went on a bull run for, I mean, back in 2008, I mean, if you look at just how much we've dropped, right? We've dropped from 339 to 268, call it 270, so 60, 70. So we've dropped about, we're actually lower than that right now. We're at 259. Oh, so yeah, call it 260 to 340. Wow. So we've dropped 80 points, right? We've already dropped 80 points. Back in 08, from the high to the low was 157 to 66. Okay, so that right there, call it 70, that was 30, so that was 87, close to 90 points the S&P lost. We've already lost 80 in like 2 weeks. There is a lot further this can go because of the length of the run, right? So when you see things on CNBC that tell you the stock market had its worst day ever, it's like, clearly that should make a lot of sense. That shouldn't be a surprise because the stock market has performed better than it's ever performed, meaning it's now a higher price asset than it's ever been before, which then means it has a higher and much greater chance of larger price fluctuations than ever before. But again, that's just the news trying to get their clicks and their likes in there again. So the likelihood we see further movements in the market's pretty likely. And don't even be surprised if you see it. I mean, it's very possible that we'll see the markets all the way down here to 220 and into 183. I know those are big price estimates, but they're really not, considering the length of our bull market, considering the severity that this could have on the economy. A big shock like this, a one-year shock, could easily throw our markets all out of whack all the way down to 180, 1800. Very possible. So we'll keep watching. We'll keep trading. Again, I'm long golds and silvers. Pretty straightforward. Okay. Yes, sir. I listened to Rogan last night. Somebody sent me that video in our room. Had to listen to that one, but also just other things. Yeah. Yeah. So there you guys have it. There's a lot going on, right? So today I was looking around at some penny stocks. That's not a good rollover. The way the markets just rolled like that, that's pretty ugly. So I was looking at the markets a little bit. Oh, something hit the scanner here just a second ago. POAI. Okay. We've been seeing some good movement in penny stocks. I've been kind of focusing some attention back into the penny stock world. I mean, I don't really think there's much to talk about here in terms of trading, just because everything should be pretty straightforward. If the markets are bearish, you're going to want to be bearish on the stocks. It's just a fact. And then when the markets are bouncing, you're going to want to be bullish on stocks. And right now, you can probably justify trading TVIX, UVXY. Any of the UVXY is probably a better one. Not necessarily a better one. UVXY is a 3 times leveraged ETF, volatility ETF. This has just been skyrocketing because the markets have been going down, which has increased the volatility index dramatically. So ultimately, I think you guys could watch UVXY. That would be a good one, because if the markets have a really, really bad day, this thing is going to have a really, really good day. So I think one of the best ways for a lot of people to trade the markets right now is by managing risk on a volatility ETF, because you don't have to short stocks, you don't have to short the market, you can still be long biased an asset. The only downside is they are leveraged, which comes with a higher degree of risk than a typical asset. Yeah, actually, I'm short GLD right now. Currently, I was short. Actually, got short GLD here. I got short on GLD this day right there. So I'm currently short GLD, and I think it's got a little bit more room down. I'm long gold and silver overall. Short term, I'm bearish on it, so I've been short. But right, so to put it simply, all assets, whether gold, silver, markets going up, markets going down, all gold, silver assets, they all move in a cycle. So whether or not the markets are going down, gold doesn't have to go up. You know, and that's really just it. Everything has a cycle. Right now, gold is high in its cycle. So from a micro, arguably macro play, it's a short. Long term, it's a long. But right now, we're in kind of the bear move. Now, when the markets panic, everything panics. So you're just kind of seeing the panic settle in pretty much all asset classes right now. And now, again, we're high in the cycle of gold, so we're probably going to pull back. And then once we're done doing that, then we're probably going to pick back up, is what's going to happen. So right now, a lot of people are saying to themselves, the market's going down like crazy. Why isn't gold going up? Why isn't gold performing well while the market's going down? But if you actually look at the market's down, let's call it 23% or something like that now, 20-something percent. And gold's up like 7% on the year. So year to date, gold has outperformed the market significantly. So gold is performing well against the market. Maybe not in the short term, because that is where we're at in the cycle of gold. We're in the selling cycle portion of the cycle on gold. That sounded really odd, but that's where we're at. We're in the selling cycle of gold. We're not in the buying. And that just so happens to match up with the dropping time of the market. So it is a little weird, but we're actually still performing really well on gold year to date over the S&P. Nice. You have UVXY 55 calls. Let's take a look at that. So you should be at 55 then. Yeah. Oh, yeah. There she goes, eh? That's going to be awesome. Yeah, you're going to be happy with those calls this morning. Oh, yeah. She's a ripper. Good stuff. Good stuff. Time is it? 8:52. Down we go this morning. I don't play gold stocks. I mean, a lot of people like Barrick's gold, but no, I just ride GLD, GDX, SLV. I have physical gold and physical silvers. Not that you're really looking to make a whole lot of money off investing in physical gold or silver. It's really just some Armageddon stuff, but yeah, I GLD, SLV, more ETF based, but you get the point. Yeah, markets are looking pretty shiesty. Hold on. Let's. Yeah, markets aren't looking good. Okay. Yep, Trump announced a travel ban to Europe for 30 days. You're right. So today I'm going to take it relatively, I don't want to say I'm taking it easy. If the markets really get smoked here. So also I want to point out something else. You will notice that of the stocks going down in the market, some of the ones that are taking the least hit are things like Netflix, BILI, right? Look at BILI, look at Netflix. So you can see if the stock market's going down so harsh, why aren't these ones going down? This is a good learning lesson for you guys to see just how a market movement and sort of reaction takes place in how other stocks perform in relation to the reaction. And that is this. Netflix really isn't tanking like other stocks. BILI isn't really tanking like other. These are streaming software at-home products that are on your TV that you would watch when you're sick and at home. And they're performing not as bad, right? So you can kind of see that's the market's telling you right there that these are stocks that are more worthy of holding or being less scared of selling because their footprint doesn't directly tie into the coronavirus as strongly as other businesses that are retail stores that you'd have to walk into with public places and other people and touch people and talk to people and be in the public, right? So that's kind of a view for you guys, okay? GPish, I mean, honestly, I don't want to tell you what to do, but I would not have been buying right now. Then again, I've been saying don't buy the market for like 2 years, and you could have made money going up in the market, but if you would, you'd already be red in the market. So that's what I mean is the buy price for the market was way too high to be buying significantly. I was still investing, but as I should be, not investing to buy. And so that's how we were for the past 2.5 years or so. The markets were just way too high to even consider buying, really, and holding. But for some reason, everyone wanted to think that the markets would go forever, which will happen every single time. So no, I don't think it's the right time to be buying. I think give it another 1.5 to maybe even 1 to 3 years, and you'll be better off buying then. Oh, yeah. Things are not looking good out there. Wow. What a day. All right. You know what? I'm going to call it there on the day. I know it's a little bit before 9, but it's a pretty busy day here. I haven't done too much scanning and looking at stocks. I've really just been kind of digesting news and really understanding, trying to understand kind of where we stand in terms of the economy and the severity of the spread. Haven't really been looking at too much to play. So everybody have a good rest of your trading day and good rest of the week as well and the rest of your life. But hopefully things don't get too crazy today. Hopefully they don't get too bad. But again, I don't think it's time to be buying, right? So if you guys come across any posts on Facebook, Stock Twits, Wall Street Bets, and people are telling or saying buy the dip, don't listen to them, because again, this is the scenario. This is the time where the buy the dip fails, and it's anyways. I've been. Don't do it. Don't buy the dip. Let it go. Let it run down. You're gonna be happy that you just waited. Okay. Everybody have a good day, and I'll see you guys tomorrow morning.